Jason, thanks so much for joining me today. You lead our insurance internal audit practice and work with some of the largest global insurance companies in the world. Can you share a little bit about what key risks you're seeing in the insurance environment?
Sure. Thanks, Amanda, for having me today. I'm going to hit on three things, although, of course, in an industry like insurance, a lot of things are moving and changing. But we're going to focus maybe on three top things that we're talking about with clients today. I think the most common and most prevalent item we're talking about a lot with clients is the influx of private credit into insurance markets. I saw a stat the other day that said something like 35% of the assets in insurers' portfolios are now coming from private credit sources. And that's leading to a whole bunch of different things, from regulatory scrutiny to, frankly, changes in product mixes at a lot of our life and annuity insurers who, with better returns on their portfolios, are able to offer customers better products. The second item on the list is everybody's favorite, right, is cybersecurity, which covers on a lot of things in a lot of different places. But what it's sort of say specific to the insurance industry is we are now kind of into about the second year of the New York Department of Financial Services Rule 500 around cybersecurity, which I think we would say had a pretty outsized impact on insurance companies because it applied mostly to insurers and banks. Banks, given their regulatory background, had a lot of those things in place, but we saw a lot of our insurance companies spending a ton of time working on how to comply with that regulation. In fact, if you look at the department's list of fines that they've handed out, all 6 or 7 of them have been aimed at insurers. And so insurers continue to mature around New York DFS. And now there is a new rule, the California Consumer Privacy Act, which has now added on top of the privacy requirements and added about 20 or so cybersecurity components, which feel and look somewhat similar to DFS, but they differ in a very important way, which is that instead of focusing sort of on your kind of core financial things like DFS, they're focused on consumer information. And that changes the systems involved and often the controls involved, which has, led to organizations having to change how they comply with that law. And then the third topic I'd bring up is insurers of all types, life and property and casualty insurers, continue to try to figure out how to transform their businesses through strategic technology investments, right? A lot of that very, very focused on how do they change the way and the manner in which they're working with their customers, but also how do they then change and manage the back office of those organizations. So we're seeing in the P&C world continued rise of large technology products like Guidewire, but similarly in the life space, companies continuing to deal with the challenges and the hardships of how do you actually convert yourself off of legacy life systems that have policies that are 50 years old and difficult, challenging to convert off of. So those would be
some tech debt to contend with, it sounds like.
That's right.
Yeah. Okay. So Jason, as a result of all of those risks facing the industry, what are you seeing in 2026 internal audit plans for insurers?
Yeah, great question. I think I'm going to try to follow along with kind of those three topics. And obviously, there's tons of other things that we see insurers having on their plate, but maybe just as it relates to those three, around private credit, what are people doing to value that private credit? How are they bringing in different sources of information? How can internal audit help management think through what it takes to look at those different investments, and what expertise does internal audit need to be able to cover off on that? I'm going to skip to strategic technology because I think the CCPA DFS subject is particularly impactful to audit, and I want to end on that. Around strategic technology, it's really having the time and expertise like internal audit function have done for a long time to get involved in the project. I think the difference and the thing that we sort of see changing in the market is a lot of these projects are using very specific tools. They're using a ton of AI. And how can internal audit come and help with what is the governance around those things, and how should the company be managing and helping those products get implemented in the right way in organizations? Then back to cybersecurity and CCPA and New York DFS. The super interesting thing about both of those rules is they both actually require, specifically in language, that internal audit have some sort of involvement in actually the oversight and governance of that rule. DFS started saying you have to do some sort of internal audit, but was kind of light on the language. And in practice, people are mapping what they're doing to the rule, but they're not necessarily involved in the end state conclusion of over compliance. CCPA has come out a little more prescriptive, which is to say you need to cover off on all the holistic things in the program on an annual basis. And what I would say the sort of current state of the market is, because this doesn't actually come into compliance until 2027, is like, what does that mean for us? How are we going to resource that? Do we need to resource that? What does it mean to actually audit those things on an annual basis? Do I just need to touch it? Can I do a walkthrough? So like the level of auditing to be able to cover off on that, I would say are still things my internal audit clients are talking to each other and talking to us about how to resolve.
Yeah, we'll definitely have some thought leadership on that topic this year and going into next as companies prepare for that. So appreciate that, Jason, very much. Thanks for giving us some perspective into the insurance world. Appreciate it.
Having me.